Hey guys, Justin from Simplified Investing. This is our weekly watch list video highlighting a market breakdown as well as a few stocks we are watching. So, getting things started, what a week it's been on SPY. What a run we have seen here. We get the strength move here, gap up on 6.2 into this wedge movement here. Nice move up here. Then we get FOMC on 6.14. It is the first rate pause that we have seen in the last 10 minutes. They are anticipating 2 more rate hikes throughout the year. Really interesting to see how that will play out after pausing it this time. Something it's going to probably need more data. They'll probably come back with the same thing, saying inflation's still too high. We still need to do everything to bring it down, and so on and so forth. Basically what they've been saying the whole rate hike period. What we see here on this FOMC day is really interesting. What formed to be a bearish engulfing off of like this single island candle right here. You can see we tested down here. So at one point this was a bearish engulfing below this candle right here. Then we stuffed this move back higher and close near the high or close above this candle high here. And then we just have an explosive move here on Thursday, breaking through this doji candle here, breaking through these highs and continuing higher. Now, this inside bar move here is somewhat expected as we do get a strong extended move here. Anytime you get a strong extended move on higher volume, it's likely going to see at least a resting period. So you get this big extension, you're exhausting all of these orders. Now a resting period is healthy. So 444, an area to keep on watch overhead. And this comes from the weekly chart here. It's tough to get a daily chart level when you do have something that is testing 52-week highs and it is making new 52-week highs. Where I got this 444 level from was this reject area. It turned into support. So a support, reject, reject here, and then we turned into support before. And then a strong reject here on this 418 rejection candle, basically from 450 all the way down here into like 425. We got close here. If we do go into the 5-day, 5-minute, got close here on Thursday on this extended rally. Watching that, it didn't break or it didn't really test. It was just more or less an exhausted move into the close. Friday here, pulled back into this 441 support region, which comes back from this rejection area. Held. What happens here? Wash out to shake out these weak orders, trap the shorts that come in here. You can see a lot of people likely shorting this move. High volume, probably shorting the low of day here. Stuff this higher, and then we move this higher as they stop out. And then we come back and reclaim this and then fade during the afternoon. So from a daily chart perspective, watching 444 overhead, may watch the initial reject here. 441 a key area, and then below that 437.80, and then 435 from this gap up here, and then hold also back here on 614. So those are a few levels to watch here on SPY. Still a very, very strong macro context within this particular name. And let's take a look at the VIX. This is, it's somewhat concerning. Now, it's not saying that the VIX is going to bounce, but when you get something this extended on the VIX, and let's go out to, say, 20 years, this is a very, very extreme area for the VIX, from basically like $12.50 or $12 all the way up into like 13. From an historical perspective on something that obviously isn't trending, this is obviously sideways channel, it's the VIX index, you're approaching very oversold regions, and a lot of times when you test in this area, you do see a bounce. So I'm not saying you're going to get a rapid spike like we saw here with COVID or the global financial crisis, but sooner than later, we are going to get a bounce. This is just continuing to sell off here. Had a strong area at 15, come back on 612, stuff it, move lower, attempted bounce, stuff that with a bearish engulfing. Watching this move lower, 13 to 12 area, from a historical context is going to be a very, very key region here on this one. Now, one other thing I want to note too is let's take a look at QQQ. And really, this is just a super strong move. Gap up, inside bar, nice, formed an inside bar from the open, closed near the high, extended move. And now, this could be a potential tweezer top. And I'm not a big fan of just trading a random candlestick pattern off the daily chart. But when it presents itself with volume, it is something to note. Different context to the S&P 500. Also more extended. We get a very strong tweezer top candle right here. Nice high volume. Do you think if we get some selling pressure, we could test down to like 361.90 into this 360 area? Again, this is exhausted. We get this basically an exhaustion move here. Bearish engulfing, trap the shorts, stuff it higher here. Continuation over this doji inside bar, continuation, tweezer top here. Watching this for a potential pullback, it could, again, make highs. Anything could happen, but pretty strong selling pressure here on Friday. Watching for a follow-through, ideally below this candle low, right around like 368, for that move down into like 360, 365 area below here. One particular stock, interesting move that I may keep on watch here. It's one that's not very liquid in terms of options, and that's something, a whole nother ballgame that you have to take into consideration. Being less liquid, you are likely to take more slippage, you are likely to not be able to get filled right away or sell when you want, and so on and so forth, and really not get the best orders through that you can. What we see here is a daily gap breakout that's closing on strength, and we get some volume. So from an area of a level right here, there's like 154.85 to 155, peekaboo, trap, peekaboo, finally holding above. I like this bullish close here. Now, what I would ideally like to see is a pullback candle that holds and then a move, or a break and retest. The only problem with trading this right now is you have to almost risk off of this area at 155. So you're already risking $5 off the move. And if you're expecting a 2-to-1 160 close, you at least got to get a move up into 170. Now, is it possible? It could happen. It's definitely an oversold stock. It's definitely testing this key area here. But a $10 move on that is not ideal. So let's say we get a pullback or a break and retest, then you could use that pullback candle, enter above that candle high, and then have a better R or a better level to risk off of instead of this expansion candle right here. So initial break, good. If we get an inside bar, watching the break above 150 or 160 for that continuation move, and then could risk off that daily candle's low. With that being said, that wraps up our watch list video for the week. If you did enjoy this video, if you could please give it a thumbs up and subscribe, it would be greatly appreciated. And if you are interested in getting our course alerts and more, feel free to check out simplified-investing.com today. We would love to have you guys on board. Hope you guys all have a great extended weekend, and see you guys on Tuesday. Thank you.